Hello and welcome to CNBC TV 18 Citizens Monetary Policy Committee. The budget is behind us and now there is a monetary policy ahead of us. The last inflation reading was a benign 2.19%. But the budget has fiscal stimulus written all over it. So what should RBI's MPC do? Does it have space for a cut? The CNBC TV 18 Citizens Monetary Policy Committee is here to decode just that. I have with me Chairman Pranab Sen and members Samiran Chakraborty of Citi, Sajid Chenoy of JP Morgan, Soumyakant Ghosh of SBI and Sonal Verma of Nomura joining us from Singapore. Gentlemen and lady, welcome to the show. Let me start with the lady. Sonal, well, now when the RBI and the MPC meet on February 6th and 7th, what are the concerns that they need to address? Should they be relaxed about the last inflation reading, which was pretty low, or should they worry that future inflation could be a little higher?
I think, the aggregate scenario needs to be considered. So on the growth front, clearly relative to the projections that the RBI has right now, which still sees growth at, in fact, above 7.2% even in FY20. The global outlook itself suggests that risks are to the downside, and I don't think the fiscal impulse will be enough to sustain growth above 7%. So risk to the growth or to the downside. On inflation, headline, of course, has undershot because of food. There's the mystery around core and why rural health education inflation has been very high, I think, remains a mystery right now. At the margin, I think the key uncertainty right now is to what extent the more consumer consumption, farm-oriented fiscal impulse is going to, and whether it's going to lead to inflation or not. Our assessment overall is that even if we take the fiscal additional growth impulse into account, average inflation over a 12-month horizon should still be in the 4% range on an average over the next 12 months. So I think overall, therefore, taking a considered view of all factors, the risk to growth forecasts are to the downside. The fiscal side is a concern at the margin, but on average, inflation should still stay within the 4% target. So that's sort of a more considered view that one needs to take on an aggregate. Fiscal, of course, at the margin, a bit of a negative.
Okay. Well, Samiran, would you be as relaxed about inflation, considering that it's not just the central fiscal stimulus? First of all, how much is the stimulus, if you can give us a number? And there is also the state's loan waivers kind of stimulus. Possibly another coalition coming to power, if it does, could also be promising the moon. Would you worry that fiscal stimulus can pull up the inflation number?
So if I look at the overall quantum of the stimulus, 0.3% of GDP of the rural package and 0.1% from the income tax, that's about 0.4% of GDP. In fact, if I look at my pre-budget estimates, this is at the lowest end of the spectrum of numbers that we were hoping for. So in that sense, one should not be superly worried about this 0.4% of GDP fiscal stimulus. We have seen in the past that the revenue expenditure side has a relatively lesser multiplier than the capital expenditure on overall growth also. So at this moment, not so worried about the core inflation impact arising out of it. But where I'm slightly worried is that even if I take this curious case of health and education inflation out of the core is still 5% plus. So yes, I am also quite appalled, and we have no explanation of why this is going up in this fashion. But because the rest of the core is also high, I would probably be a bit more worried on inflation, because in our adaptive expectation way of looking at things, we are, in a sense, last 3 quarters of low food inflation, we are projecting it out. And if the final purpose of all this stimulus is to get food from deflation to inflation at some point of time during the course of the year. Because if that does not happen, then the whole package is practically useless. So if I try to build that into framework where core inflation, and I'm taking off the health education part, is still high, then although we have a 4.5 December 2019 forecast, there could be upside risk to that forecast, particularly if there are any kind of supply side shocks on food.
Okay. So the worry is not fisc so much, but the fact that anyway core inflation is high. How would you react to the same set of factors, Sajid? Do you worry that core inflation, and why should we consider even education and medical one-off?
So let me make two observations. One is, I think that that's important that the MPC preserve the sanctity of the framework. And the framework is they have to go after headline inflation being close to 4%. That was the same logic the MPC used in October when people were clamoring for a hike, when the rupee was under pressure. And they were right to say ultimately everything has to flow through inflation and growth. By that yardstick, if you look out over the next 3 quarters, we see inflation meaningfully below 4%. As far as the eye can see. Now, we can always project inflation 4 or 5 quarters down the line and say it's above 4% then, but frankly, the standard error around these forecasts are very high given the quantum of uncertainty 1 year from now. Given that in the next 6 to 9 months, inflation is comfortably below 4%, I think, and given the fact that the Fed has given central banks in emerging markets a bit of a free pass, I think sticking to the sanctity of the framework is important. Otherwise, we're going to have a lot of unpredictability if the middle of the game we change the goalpost. And I think some space for modest monetary easing is opened up. The second point I'll make is the one Shaumaran made. The analytical question for all of us is, if you project a year or two out, given this wide divergence between food to core, what eventually converges to what? Will food inflation go to core inflation, or will core inflation come down to food inflation? Our analysis has suggested that things have changed the last 6 years. When I was in the Urjit Patel Committee report between 2000 and 2012, we found that actually core would go towards food, right? And therefore, headline became the inflation target. But the last 6 years, the data is very clear. It's basically headline that eventually goes to core. So there is reason, for all the reasons Shaumaran laid out, to be cautious 12, 18 months from now, because that's how long it takes for these things to converge. But over the next 2-3 quarters, I think that the inflation numbers are so compelling that the MPC, I think, will have a little space here to breathe.
Okay.
Just one quick comment on Sajid's first point. While I agree that the MPC has this quite well written about the headline inflation, the challenge also is that in October they have communicated that the definition of the stance of calibrated tightening is rate cuts are off the table. So if they now do a stance change and a rate cut together, then is it sticking to what they had said earlier?
Okay.
It's just a small point.
That is going to be everybody's point also. Can you do both in one? But I'll come back to you all on stance as well. Before I get to the chairman, since he will have to make the wrap-up comments on the inflation and the macroeconomic factors, Shaumyo, are there any global factors to consider over here? Are they quite clearly benign? And therefore, what is your inflation forecast?
I think just a little point about the global conditions. I think global conditions currently are showing diverging trends, and there are clearly two contrarian views. One view is saying that possibly the US, the slowdown is synchronous and is around the corner. There is the other view is that slowdown is possibly a little later. So there is still not consensus whether the global economy is going to slow down meaningfully in 2019 or maybe later.
Okay, but I want you to tell me whether the state and the central fiscal stimulus, what is the quantum and what mischief can it do?
Exactly. So now coming to inflation or the central fiscal, I think the fiscal numbers, if you look into it totality, yes, there is an element of fiscal impulse, and the projections which have been made in the budget are a little bit ambitious. Just to give you a sense of the number, the total tax collections for FY20 is around, I think, made to be around 14% or so. But this year's number is close to 20%, whereas the decadal growth rate is actually 14%. So in case there is even a 5 to 10% shortfall in the tax collections, then that could actually meaningfully push up the total revenue numbers for next year, which is going to be difficult to achieve. And as we know, there is an 19,000 additional borrowing through dated securities, 25,000 additional borrowing to small savings. So that number 45,000 in the next 2 months, crore is not a small number. So there is an element of fiscal impulse, but the question is how quickly it can actually push up the inflation. That brings me to the last point about the inflation. I think yes, there is an element of upward surge in the core inflation, but I think the numbers in the core inflation is still a mystery. We have been trying to understand what are the reasons. I mean, possibly the prices may not be the reason. One of the reasons which is being given out or not, I mean, been informally talked about, is a change in the methodology, how the CSO is collecting the data. If that is the case, then that could actually open up a Pandora's box, because in that case it is a possibility that could be better price discovery. Because even if I leave aside health, in education also, a lot of
you are saying this core inflation can persist?
No, what I'm trying to say is that as long as there is no clarification from the CSO in why exactly how the data is changing, I think it's very uncertain to say which way the core could move. But at the end of the day, I think the core is still meaningfully down, because if you look into the urban core, that is as 5.26%, the rural core has gone up. And if you strip aside, if we just only look into the headline inflation number, rural, and if I strip aside this health and education component, the rural headline inflation today is around 1.2%. So that means that inflation is still not a concern, but I am concerned how this core is going to behave, because if it's a price discovery, then there could be some other way of looking into the
very
data.
mention of the word CSO opens up Pandora's box, but I am not going down that road at all. Dr. Sen, can you put all this into into perspective for us? There is a rise in core inflation, and yet the rural distress indicates that they're not making enough money at all. And the persistent question is, India's real interest rates are very high. If the RBI is at 6.5 and rural inflation is at less than 2, overall inflation is close to 2, where is the justification not to cut?
Well, let's not go into justification for a cut, but just let's look at what's happening and what it implies.
Sure.
We've talked about the fiscal stimulus. That's only one part of the story, and as I think Shomiran rightly pointed out, it's not huge, it's nothing that should scare us terribly. But the side we are not looking at, and that's what I would urge the others to take a quick call on, is that this 75,000 crores that's projected to go as rural income support is actually injection of liquidity into the rural cash economy, which hasn't happened in a while. One of the problems we've had is that the cash economy was suffering for liquidity. This is a direct liquidity transfer, so the monetary mechanisms in the rural economy hopefully should perk up. Now, whether they're going to perk up enough to reverse this trend in falling agricultural prices, I don't know. I don't think the sums are large enough to do it as yet. But at least it's the first reversal of a trend that's been going on for 5 years.
Yeah.
And I think that's important.
Okay.
So you can see actually not just agricultural price revival, you may see the MSME sector reviving as well with this kind of liquidity injection. So I think there is an upside there which we are not taking into account. So on the whole, my take on what's happening is that the fiscal stimulus is there, it's not overly worrying, but the more important thing is that rural revival seems to be a possibility now, and I think that's something we need to support rather than get worked up and try and nip it in the bud.
Okay, that's clearly giving us some idea of what is in your mind. Dr. Sen and members, I have to take a quick break, but I'm coming back and asking you all whether only the stance has to change, whether an action is needed, and any other factors that the MPC has to consider. We're back in a jiffy.
Clear the fog around equity investments and grasp stock market concepts. A comprehensive guide curated for stock market novices. Detailed with practical tips and illustrations and no daunting jargon. CNBC TV 18 presents Stock Market Investing. Every morning on CNBC TV 18's Bazaar Morning Call, data gets transformed into expert insights that drive decision-making.
I don't watch business channels. If I do watch all CNBC. Any market moves because of liquidity.
The Asian screen is green.
The market has done remarkably well.
Stocks expected to be under pressure today.
The market is heading up.
For policymakers, CEOs and decision makers.
The first channel I put on is CNBC TV 18 because I want to know the business news.
From minute-by-minute analysis to expert inputs and global views, you get the news before it hits the trading floor. Bazaar Morning Call. At these times, only on CNBC TV 18.
Morning Call brought to you by Vibrant Gujarat, shaping a new India.
Welcome back to this special deliberations of the Citizens Monetary Policy Committee of CNBC TV 18. We have with us Chairman Pranab Sen, members Shamiran Chakraborty, Sajid Chinoy, Shaumikanti Ghosh and Sonal Verma. Sonal, let me now come to the action that the MPC has to take. Taking into account the global scenario now in terms of crude prices, currency moves, especially weakening of the dollar, do you think there is elbow room for a cut from the MPC?
I think we are still in a wait-and-watch scenario. What clearly should happen is that the stance needs to be aligned with the changing risk globally and locally. And, those changing risks, to our mind, still call for the stance coming to neutral, from calibrated tightening, because the risks are now more bidirectional rather than unidirectional. But do we have a case to deliver the cut right now? I think we need to still figure out whether core inflation and why core inflation has been elevated. And we need to also sort of figure out the impact that the government's new fiscal stance is going to have on the outlook medium term on the farm sector and also overall for the economy. So February, in our view, is early for the MPC to be delivering a rate cut. The first step needs to be a change in stance to neutral, and then depending on how things pan out, a case may not be made.
Well, Saviran, you had a similar view that, already the stance is at calibrated tightening and therefore should both change together. Is that argument enough? Okay, things have changed dramatically. We are changing stance and giving a cut together. Is that difficult to explain?
It wouldn't have been if all the stars would have aligned.
Okay.
So if we wouldn't have got any fiscal stimulus, we wouldn't have got any increase in core inflation, then I could have argued for that as well. I still think it's going to be more of a dovish pause. So there will be ample signs in the policy to say that the MPC is now prepared to move on the rate cutting side. The question actually for the markets is not so much going to be on whether the cut happens in February versus in April, but would the MPC signal anything about the quantum of rate cuts than what that one can expect in this cycle? Because if you just go simply by your inflation projections and where the repo rate is, the space appears to be very limited unless the whole construct of the MPC changes in some form or the other. So that's what the market would be very closely watching, that it's not just about the stance change versus the rate cut or not. It's beyond that, is the new governor going to bring in some new thought process around, say, real rates or around the horizon for which you are looking at inflation. As Sajid was mentioning, that our ability to forecast inflation 12 months out is very limited. So should we be focusing little less? These are things which I think that's why the February policy is going to be very, very interesting to watch.
Yeah, the statement will clearly be very important. The minutes will be very important. Sajid, this credibility issue will come. That come a new governor and he's ready to do the government's bidding. And just in the Vibrant Gujarat speech, the governor also pointed out to the core inflation. So anyway, do you think it's so difficult to overlook this calibrated stance, just change stance and give the cut together?
Remember what happened back in June, right? That without the stance being changed from neutral to tightening, we had a hike. Because the MPC was reacting to the current macroeconomic environment. You can't be caught in semantic issues. The fact is the macroeconomic environment has changed and inflation is meaningfully below what all of us thought as recently as October and November. So I think we certainly expect for them to change the stance. We think there's space for shallow easing, a very modest easing. Whether it happens
just once.
In our forecast, just once, because the growth, I think, is holding up better than we think it is. There are fiscal risks on both sides. That if you look at the public sector borrowing requirement, it's above 8.5%, and that's a very large number. On the other hand, we still have to see operationally whether the stimulus is even deliverable, and therefore whether we do get some kind of rural consumption spending later in the year. And the third is core inflation is elevated, and we need to figure out headline going to core or core going to headline. So there are enough risks down the line, but you have to react to what you see today. And the fact is, over the next 6 or 9 months, inflation is meaningfully below 4%, and that's the horizon at which we can forecast. The last thing I'd say is, the whole idea of having a committee is to have institutional continuity, so that one person comes or goes, it doesn't change the underlying mandate. So our view is you get
credibility will not be the issue.
Well, because the data is compelling enough for the MPC to act, which is given back to environment.
Well, actually, Xiaomi, I wanted to ask you something else. How useful will be a cut in the first place? Because if there's 7 trillion borrowing from the central government next year and a 5.5 trillion rupee borrowing from the state governments, this is like a 12 trillion borrowing anyway coming. Even if they give a cut, will it really help anyone? It's only overnight rates looks like will go down. And will you expect the long end to meaningfully get cheaper?
No, I think you have made a very valid point, but let me just also add one more data to it. 7 million center, 5.5, 7 lakh crore center, 5.5 lakh crore states, possibly, and another 4 lakh crore which has been given out in the budget yesterday as extra budgetary resources. So that makes the number around 16 lakh crores. Having said that, I think growth is meaningfully weak. If you look into the last 2 fortnightly credit growth numbers, they have in the negative territory. And I would just like to, but the only good thing is that the credit to SMEs has gone up after the government launched this program across 100 districts. So that's the only silver lining in an otherwise credit growth which is declining in the had declined in the month of December. So to me, growth is a concern. And it will continue to remain a concern at least for the next couple of months because the way things are moving. And I think even though there is a fiscal element of stimulus, I don't think it will be enough to park up the growth sentiments as of now. Now, having said that, whether the space is there for a rate cut, I think that yes, there is a space for a rate cut, but just to borrow from Sajid, I think the space is shallow. Maybe one rate hike or one rate cut or maximum 2 rate cuts, and given the fact that the inflation currently is significantly benign and in continuing to benign at least till the month of August or even September. So there is a space for a rate cut. Whether it comes in February or in April, that doesn't matter. But at the end of the day, if it comes, I think that will also give a good signal to the market that there is, the central bank is also meaningfully aware of the depressed demand condition currently in the economy.
Okay. Well, Dr. Sen, winding up thoughts from you, sir. You referred in passing to that money going to the rural areas finally, and maybe MSMEs also will be able to benefit by it. There is another problem that MSMEs face. The debt market issues are not over. NBFCs are still meaningfully under trouble, and there are more and more problems coming out of the woodwork, whether it is a DHFL or whether it was the old ILNFS or SL Group. So I'm not very sure the MSMEs are seeing any relief on the horizon, even with the SME package. Dr. Sen.
No, that is correct. But, this, as I said, this is the beginning of a process rather than the culmination. But one thing we need to be very clear about, Latha, is that if currency is actually moving into the cash economy, what it means is that liquidity in the credit economy is going to come under pressure unless something is done. So frankly, I think there's a fairly compelling compelling case for a rate cut now, instead of waiting for it. But having said that, I think the point that was raised earlier, which is the extent to which the MPC's ego gets tied up into the stance that they had taken, and whether they're willing to say that we made a mistake and we're going to do a rate cut, that's going to weigh. We're all human. But on the whole, if you recall, I think last time we had come together, Sonal and I had in fact said we should be moving to neutral then.
Yes, yes.
We could pretty much see this coming. So, frankly, now, if ego doesn't get into the way, I think it's a compelling case for a rate cut. And the stance will, of course, have to be changed. Whether they'll change it to neutral or change it to accommodative, is a call that they'll have to take.
Okay. Well, I think the shades of view are that, yes, the rural economy is hurting. There isn't too much of a threat of inflation going up, though, the core inflation is a sticking point, and as is the fiscal stimulus. But clearly, we have a dovish to a more dovish MPC at this point in time. Time to vote. First, let me begin with the lady again. Sonal, what would you want in terms of a stance from the MPC on February 7th?
So we expect the stance to change to neutral.
Right, we should get that neutral stance. Gentlemen, Sajid, change to neutral. Well. Okay, stance changes to neutral. Samiran, all right, stance changes to neutral. Soumya?
Stance changes to neutral.
Okay. Dr. Sen, I think you made yourself clear, but nevertheless, your vote? Stance to neutral. Okay, so that's in one voice, the stance changes. But now, is there action? Sonal, you expect a rate cut as well?
We're expecting a pause.
All right, so quite clearly a cut maybe later on. Soumya, what would your...
To us, it doesn't matter whether in February or April, but we are expecting a hold down.
Okay, so that's two pause candidates.
One more pause.
Okay, pause. That's another pause coming in. Sajid?
It's a close call, but it's a 25 basis point cut.
25 basis cut. Okay. Dr. Sen, actually, it's a 3:1, but still, sir, which way would you lean? Okay.
Cut.
Okay, it's a cut. All right. So there are 2 members voting for a cut and 3 members voting for a hold. Let's see how things pan out, whether as the semantics come in the way, whether worries about core inflation come in the way, or whether fiscal stimulus comes in the way, or none of them come in the way, and you actually get a cut on February 7th. Thank you very much, Chairman Sen, Sonal, Sajid, Samiran and Soumya for participating in the deliberations of the Monetary Policy Committee.